Welcome back. Today we're diving into one of the most significant internal shakeups in the history. I want to help you navigate these crypto markets because right now, I know for a fact that a lot of people are confused. And that confusion isn't coming from nowhere. Everywhere you look, the narrative keeps changing. One day people are screaming that the bull market is over. The next day they're calling for new all-time highs. Then you hear people say we're entering a prolonged consolidation phase, or that we're secretly already in a bear market, and most people just don't realize it yet. So naturally, the big questions keep coming up. Are we in a bear market? Are we consolidating? Or are we still in a bull market? And you guys already know where I personally stand on this. When I zoom out and look at the broader structure of the market, especially when I look at Bitcoin and Ethereum still holding very strong, very healthy ranges, it gives me a lot of confidence. Confidence not just in crypto, but in where we are in the overall market cycle. Bitcoin is not breaking down. Ethereum is not collapsing. On-chain metrics aren't screaming panic, long-term holders aren't mass exiting, and most importantly, capital hasn't left risk entirely, it's just rotating. That distinction matters. Here's the reality that most people don't want to accept. Crypto doesn't move in isolation. Right now, capital has been flowing heavily into stocks. We've seen major inflows into the S&P 500, into tech, into AI narratives. We've also seen money rotating into precious metals, gold, silver, defensive hedges. And when that happens, crypto often lags. But here's the key part that most people misunderstand. Lagging behind does not mean dead. Lagging behind does not mean the cycle is over. Lagging behind usually means compression. Crypto historically moves in phases. Capital leaves, builds pressure elsewhere, and then comes flooding back once risk appetite peaks again. When it does, it moves violently, fast, and without mercy for people who lost patience. So when I see Bitcoin and Ethereum holding strong while altcoins chop sideways and memes bleed slowly, I don't see weakness, I see accumulation behavior. And that's exactly why I'm still here. So with that said, let's get into today's video, and let's talk about Toshi specifically, because it perfectly represents what's happening in this market right now. On the surface, that doesn't look great. And if you're someone who only looks at short-term price action, it's easy to feel frustrated, bored, or even discouraged. But context changes everything. About a year ago, right around January 26th, we saw that massive Coinbase-related pump. That was a pivotal moment for Toshi. It wasn't just price action, it was validation. It was confirmation that this project had crossed from being a niche base meme into something the broader market had to pay attention to. Even after the recent pullback, Toshi is still up approximately 148% year over year. Let that sink in. Despite the chop, despite the boredom, despite the lack of hype, the project is still massively outperforming traditional markets. But anyone who's been here long enough knows this already. After January 26th, price action changed dramatically. Volatility cooled down, the hype cycle faded, and what was left behind was something far more important than green candles: conviction. At all-time highs, Toshi ran close to $1 billion market cap. We're talking just under $900 million, potentially even touching around $940 million depending on where you were tracking it. That's not a small achievement. That's not luck. That's not random. This was a project that many of us called early, sub $150 million, and watched it climb relentlessly as base adoption accelerated and Coinbase integration became more obvious. And now it's quiet. There's no constant news cycle. There's no non-stop hype on Twitter. There aren't influencers shilling it every hour on the hour. And yes, market cap reflects that silence. But here's what I want people to understand. Silence is not failure. Silence is where strong projects separate themselves from hype-driven ones. The most recent major update for Toshi was a listing about 2 months ago. No flashy announcements since then, no artificial excitement, just a project existing, building, and letting the market decide when it's ready again. And that's why the community matters more than ever. One community member summed it up perfectly when they said, "I've been holding Toshi for over a year. I've seen the highs, the lows, the hype, and the fear, and I held through all of it. No panic selling, no chasing candles, just conviction. What keeps me here isn't short-term price action, but long-term potential. a strong community, a clear identity, and a narrative that fits this cycle. Most people only show up when things are green. The real ones are built during the boring and painful phases. That's not cope, that's experience. Anyone who has survived multiple cycles knows that the boring phases are where positions are built. They're where supply quietly moves from weak hands to strong ones. They're where conviction is forged. The majority of people will always show up late, when price is vertical and risk is highest. The minority builds during silence. Now let's talk about something more technical but extremely important. Toshi's bubble map. When you look at it, the distribution is healthy. It's spread out. There's no single entity controlling a massive portion of the supply. That's generally bullish. But it also sparks a debate that's becoming more relevant in this cycle. Some people believe bundled launches are becoming the new meta. The argument goes like this. If a small group of trusted wallets holds large portions of supply, they can manage liquidity better, avoid early dumps, and theoretically extend the lifespan of a project. And to be fair, that model can work. But it comes with a massive trade-off. With fair launches like Toshi, supply is distributed widely. That's bullish because no single actor controls the project. There's no centralized choke point. There's no one wallet that can nuke the chart overnight. The downside, people take profits. And that's not a flaw. That's human behavior. Everyone in this space is here to make money. Expecting otherwise is naive. Fair launches reflect real market psychology, not manufactured stability. Now compare that to something like White Whale, which I've talked about before. It's sitting around $139 million market cap. When you look at its bubble map, it's extreme. One wallet alone holds roughly 40% of the total supply, valued around $66 million. That kind of setup can lead to explosive moves, but only if trust holds. Bundled launches absolutely have a place in crypto, but they require intense trust, transparency, and alignment. Without that, they become ticking time bombs. Toshi doesn't rely on trust in a single entity. It relies on community conviction. Despite everything, Toshi remains a very solid project. It's organic, it's natural. There are no paid KOLs, no artificial hype cycles, no constant influencer campaigns. And yet, it still managed to get listed on Coinbase, Binance Alpha, Bybit, Upbit, BitHum. Those are not small exchanges. Those are some of the largest platforms in the world, especially in Korea. And speaking of Korea, Toshi has a massive presence there. That matters more than people realize. Korean retail historically plays a huge role in meme coin momentum and narrative shifts. One thing the community has been vocal about lately is Base not actively promoting meme coins as much as people expected. That's frustrating, because let's be honest, Toshi feels like the face of Base. It represents the culture, the humor, and the community side of the ecosystem. But here's the truth. Narratives are not handed to you. They are forced into existence. That's why this is on us. We keep talking about it. We keep pushing it. We keep making noise. We push it to Brian Armstrong. We push it to Coinbase. We make it impossible to ignore. When people think Coinbase, they should think Base. When people think Base, they should think Toshi. That's how narratives are built. If you're looking for an entry ahead of the next major leg up, Toshi is still trending within a clean, long-term uptrend. Zoom out. Ignore the noise. I refuse to believe that the king of Base doesn't eventually smash through its local all-time high. And when that AT8 gets cleared, psychology changes instantly. New price discovery, new narratives, new attention. From these levels, a 20x is not impossible. It's a function of liquidity, attention, and timing, and even whales see it. One Toshi whale recently mentioned holding around 5,000 Toshi and emphasized something critical. Always have a hedge. That's how professionals think. Not all in, not emotional, balanced exposure. If you want to know how to properly position your portfolio, how to build something that can survive both bull markets and bear markets, that's exactly why Meme Coin Mastery exists. We don't just chase pumps. We teach structure. We teach risk management. We teach conviction. It's $97 a month, or a one-time purchase of $99.97. And when I say one-time, I mean exactly that. You never pay again. There's a ton of value inside. People are making life-changing gains. But let me be clear. Past performance does not guarantee future results. And if this helped you see the market more clearly, then you already know what to do. If you found this video helpful, don't forget to like, subscribe, and turn on notifications.